StarBucks stock, SBUX is the symbol, has collapsed. Some analysts are saying that the move was so pronounced that there was such a big catalyst event that it's akin to the 2008 financial crisis shutdown then, or COVID. That's how bad the move was. But it's also based upon revenues and earnings where Starbucks is right now. Now I've been reading through a bunch of stuff on this from various news agencies trying to get a feel for what's going on. The question is, what's Starbucks stock right now? What is it worth? You look at future earnings per share and you ask the question, given the price, what kind of yield could you get? And is there an alternative investment that you can outperform that yield? Fact is, Starbucks stock right now is about appropriately priced, but a lot of people are saying jump in, buy on the dip. This would assume that Starbucks stock would then move back upward and it's merely a bump in the road. That all of a sudden, all the foot traffic, 4% drop worldwide, would start showing back up again. Is that necessarily true? 4% decline in total foot traffic. It's not just Starbucks. Nabisco, churn rate on Oreo cookies, slowing down. People aren't buying those premium products. They're opting for the grocery store generic brands instead. A cookie's a cookies. They're kind of look at things. Wendy's, McDonald's, they're saying the same thing. Foot traffic is getting smaller and smaller. So this isn't just a one-off for Starbucks. Yeah, there's some boycotting going on. The brand didn't do too well with the Gaza, Israel situation. They didn't do well at all. There's some boycotting. But that doesn't explain all the lower foot traffic at all the other stores. And that's what you really need to watch out for, that it isn't necessarily Starbucks as much as the consumer themselves are just tapping out. Let's jump in. I want to kind of break down Starbucks stock, show you what I look at when I look at analysis for any particular stock and what I believe Starbucks stock should be worth right now, and if Starbucks stock SBUX is a buy. Let's jump in. Got two clippings here from Dow Jones Newswire and Benzinga. There's some great articles there. They broke down both, kind of looking at two of the angles of what's going on. You got to be on drugs to say something like that on national television. And I kind of laughed at that, but I think we all kind of did, except for the investors, of course, in Starbucks stock. I like Starbucks stock. I think it's a value investment. Starbucks stock itself could potentially return great value to an investor, but the price right now might be a little bit high. The CEO just happens to believe that they're on track. Again, maybe there was some drugs involved. That's another issue altogether. Regardless, the fast food fight, this caught my eye as well. It broke down a lot of the shortcomings of a lot of the other competitors. McDonald's, I mean, aren't they like the most bargain priced retailers out there, fast food chains out there? And yet they're not seeing as much foot traffic. What's going on there? Real simple. The Federal Reserve, because of price pressures, has had to raise interest rates, and the consumers are tapped out because incomes are finite and consumers are spending too much on credit card debt. But at the same time, you had what got us there in the first place, two things really, the COVID shutdowns. All of a sudden, prices shot upward because of the break in the supply chain. So you have companies like McDonald's, Wendy's, Yum brands, they all raised the prices naturally to cover extra costs. Well, they didn't lower those costs. They just kept basically taking as much money out of the consumer as they possibly can. But then the consumer rebounded and then turned to these companies and said, I need a raise. I can't function in this economy. So prices or costs continue to rise to meet these higher costs. the Federal Reserve has raised interest rates, yet again adding more pressure on the consumer. Any debt that they took on, that debt is being paid at higher interest rates. The consumer, by and large, is tapped out. We're starting to see signs of this with the economic data we're seeing. We just got non-farm payrolls, weaker than expected. A couple days before that, we got GDP, slower than expected. The economy is shrinking. So the move for StarBUX stock lower, maybe we'll see that in McDonald's as well next, simply because the consumer can't respond to these kinds of price pressures anymore. Incomes are finite. Costs keep going higher, especially with interest rates. So we move forward. Here's a look at StarBUX stock itself. SBUX dropped. If you go backwards and you look at 2020, March 2020, when StarBUX stock fell as much as it did, we're kind of about 50% of that move there. I mean, this was a worldwide shutdown. We just witnessed a 50% move similar to the COVID shutdowns. That's how big of a move StarBUX stock fell. But let's compare StarBUX stocks, because here's McDonald's Corporation. Is it possible the McDonald's starts to hiccup a little bit and we start to see moves lower in McDonald's stock as well? Next, Mondelez, Nabisco. You're just not eating Oreo cookies nearly as much. Now, these guys haven't seen as much of a decline, but they're certainly not seeing the continued move higher. My belief is that we have seen the peak in the stock market, the broader stock market, and across the board, we'll start to see stocks to sell off. I just did a video on a stock market crash potential. Here is Yum Brands. Interestingly, Taco Bell was one of the few outliers. They saw a 2% increase in foot traffic year over year. Everything else down about 4, 5, 6%. Wendy's. Wendy's I wouldn't necessarily call a profit machine. And as you can see, their stock is pretty well entrenched. Nonetheless, the lack of foot traffic is affecting Wendy's as well. Let's take a look at the price to earnings ratio. Because of the current earnings and the massive drop in StarBUX stock, basically it's where its valuation normally is at 25.2 times earnings, current earnings. So this is fairly normal for StarBUX stock, I should say. Here's the look at the quarterly revenue. Year over year, it fell year over year, which is kind of surprisingly because StarBUX stock themselves, they usually print increasing quarterly revenue, excluding of course Q4 into Q1. Q4 is their holiday season. Q1 things slow down, but we did see Q1 pop this year as well. It's just Q2 fell so much. You have to go backwards in time to 2022 to see that kind of move lower. Projected revenue, $37 billion for StarBUX stock going into the next year, 2024. Pretty decent jump expectations for 2025. That's sort of the asterisks you need to kind of take a look at. What's going to happen with the economy? The Federal Reserve, the way I see it, they can't do anything right now. The economy is contracting right now because of the high interest rates. But we've got the presidential election going to hit on the 5th of November. They don't want to get in front of the presidential election and raise or lower interest rates. It would make them look like they're playing favorites. Now, it may be that we start to see some unemployment numbers come in weaker than expected. And that's really going to play havoc on the stock market because the Federal Reserve really won't be able to do anything. Now, we get CPI data next week, and that could continue to show pressure upward. So I'm not so sure we see 2025 projections, even though they have been revised already. Net margins, 9%. It's the lowest we've seen in a while, and this is really has a lot to do with economies of scale for StarBUX stock. The S&P 500 printing about 11.25 net margins, so these guys are below on that. Earnings per share, and as you can see, these earnings per share coming in at 68 cents. This is a huge drop lower. It is kind of outstanding, if you will. Projections for earnings per share for StarBUX stock, 364, a mere 6 cents higher than 2023. But again, they're looking for that big jump in 2025 to 412. But I question that because the Federal Reserve not being able to move interest rates like they might want to, will have to wait until November to do so. What kind of damage does that do to the consumer by then? We'll start to see increasing number of companies reporting declining revenue, which means decreasing profits. They're going to need to protect their bottom line. They're going to start firing people. Unemployment comes in lower and lower to negative versus expectations. All right, that on aggregate affects total demand in the economy. The Federal Reserve still can't do anything, not until November 6, 7 on those meetings right there. Then they finally lower interest rates. Maybe they drop interest rates from 5.25 to 5.5 right now. Maybe they go all the way down to say 3.5, 2.5 to repair the damage that they've already done. Would be a massive move back downward, which is one of the things I've always say about the Federal Reserve. They destroy everything. They basically created the housing bubble and sat there and said, wait a minute, there's inflation? I mean, they were behind the curve on that. They're going to probably mess this up and drop interest rates too far. Maybe they go to 2%, maybe down to 1.5% on the short-term rate to repair the damage that they've done. In the meantime, 2025 projected earnings per share, nope, I don't see it. But let's break things down. All right. Current price for StarBUX stock, 72.5. Earnings per share projection, next 4 quarters, not necessarily 2024, but the next 4 quarters, $3.81. You do the division on that, 5.25%. That's not a bad yield. Except, will the consumer continue at the current pace and bring in that revenue and those earnings per share for StarBUX? I don't see that happening. I see the Federal Reserve being stuck right now. They're going to have to deal with something. 6 months from now, they'll start lowering interest rates, but the ball will already have begun to roll. StarBUX revenue and all revenue for all companies, we start to see big declines because the consumer is entrenched, and then people start getting fired. And because people are getting fired, less revenue for companies because there's less people on the payrolls. This will continue further and further. Beyond that, the Treasury yield right now, 4.425 is your yield for the 10-year Treasury yield. This is looking like a pretty attractive alternative to a potential StarBUX stock, which could continue to move lower. Risk for investing in the Treasury yield, Warren Buffett doesn't think there's much risk at all. He just dumped Apple stock in favor of Treasury yields. The Federal Reserve is going to be lowering interest rates, so yield is not going to go any higher, which means price goes up. There's your stock to buy right there. StarBUX stock? Nope. But I'll keep you posted on this. Make sure to hit the like and follow button. If you're looking for written content on this, I have my Substack newsletter down below, the link for that. I've done an article on StarBUX stock. Make sure to catch that. We'll see you in the next video.